Hi, this is Charles Kelly. Hope you're having a great day. Well, you've seen the headline there. An influential government review department has suggested that capital gains tax could be doubled, and many of the rate that is, and many of the exemptions that currently exist could be whittled away, meaning that effectively you're paying more tax. And this comes about as the property market and property investors in general have been quite hit quite badly with tax rises in the last few years. We've seen interest on mortgages been taken away if you hold your mortgage in a sole name, not in a big company name. We've seen exemptions like rent depreciation on wear and tear being taken away, which ends up costing thousands of pounds more in tax. And nobody really turns a blind eye because we are what I would call a fairly soft target. No one's going to have any sympathy for a buy-to-let landlord or a second property owner or someone who has a portfolio of shares. They think, well, let them pay the tax, let them pay their fair share. But you have to bear in mind that a lot of people are not big landlords. They are small investors saving for their retirement because they either don't have a gold-plated company pension scheme like MPs do, or civil servants do, government workers, nurses, doctors, firemen, police. They all have these guaranteed gold-plated pension schemes paid for by the taxpayer in most cases. Most people don't have that. Even people who are employed now have, far inferior personal pension schemes that depend on the growth in the stock market to give them a pension. So many people are investing in property to supplement that, to say, well, I'll go out and find a property, I'll spend the time hunting for properties, and I'll deal with tenants, I'll go and fix toilets, I'll deal with everything. And they might buy one or two properties. The vast majority of the 2 million buy-to-let landlords own one or two properties. So, these are the people that are now going to get hit. Now, this government review body I'll just give you the name. They're called the Office for Tax Simplification, and they've found that many people. They said many of the features of the capital gains system can distort behaviour as people try and lower their bills. Well, that's a legal right, that you have a legal right to lower your bill. Winston Churchill said it. Everybody has the right to legally avoid paying as much tax as possible. Tax evasion is illegal. So many of the large companies try and evade taxes by having offshore bases and invoicing themselves, like Starbucks, for instance. But most ordinary people can't do that. You can't get away with paying tax especially if you're employed. You have the tax deducted at source. If you sell a property, you have to pay tax on it. You have to pay capital gains tax. You pay tax on the money that you've earned in order to buy the property, in order to pay that deposit down. And now they're even taking away the tax relief on interest on the mortgages that you pay, which is very different from any other business loan. Every other business loan, you would deduct the interest you pay on that business loan before you pay tax. The current rate is levied at 10% for basic rate taxpayers, 20% for higher rate taxpayers, but this is added onto your tax. So it doesn't sound very much, but when added onto your tax, it can be a hefty blow. Yes, there is an exemption. You don't pay on the first 12,300, which is similar to income tax. You don't pay any income tax on the first 12,500, but it's still. It's still, if you sell a property, you take that into account. It's a heavy blow. So many people who are currently, renting out a property or bought a property for future sale in retirement, now they're not going to be affected by such a tax rise. But in the future, when they come to sell that property in retirement, if they decide to sell, then they are really going to be hit with extra tax. And this is not law yet. This is not a tax law, but this is what the Office of Tax Simplification are suggesting to the Chancellor, Rishi Sunak, that they should implement. And so when people come to retirement, as the general plan is if they have one or two properties, they might sell one and pay off the mortgages on the other, so that they've got a mortgage-free property. Well, that plan could be thrown into disarray now as these tax rises hit them in their pocket. One solution is perhaps not to sell the property and just keep on renting the property and using that income in retirement. Not everyone wants to do that. Not everyone wants to be a landlord in retirement, but that is one way around. You can get the property managed so you never have to sell it. And if you need any capital from the property, you can borrow against it, and that's tax free. However, your relatives, when they inherit, your children, your grandchildren, when they inherit that property, will pay tax as well. So they're getting you every way, aren't they? You're paying tax on the income you get from the property. You're paying tax on the income you've earned in order to buy the property. Then you're paying capital gains tax if you try and sell it. And if you don't sell it and pass it on to your heirs, then they're going to pay inheritance tax of up to 40% on the value of your estate. And many people say, good, especially socialists, they'll say, good, tax them, and that money is fair that they should tax it. But why? Why should somebody, a good friend of mine died recently, and she came to this country with nothing. She built up everything through hard work, and really struggled to earn money, to save money, to buy one or two properties. And now her daughter is going to have to pay a lot of tax on the sale of those properties just to inherit them, when all this tax has already been paid. And I just don't, to me it's wrong, but every country does it virtually, that the state should dip in and say, right, we want a portion of your hard work. Yes, we've had a portion of your hard work all your life, but we're going to take another dip at it in order that we can spend the money as we want to. We can go to wars, we can dish out billions of pounds in loans to people and this sort of thing. We can spend it on projects like cross the HS2 project, which is going to cost 60 billion, and all sorts of things. Yes, I know that the country needs money to run. Yes, of course every country needs taxes to run the country, but I think taxes can be too excessive, and they are a disincentive for people to go out. And this capital gains is not about just private property owners. It's about people who run business, people who build up businesses from scratch, taking the risk, using their own money, maybe not drawing a salary for many years. And then if they sell that business, the tax man comes and, thank you very much, we'll have a slice of that as well. It's like having a silent partner on your shoulder, looking over your shoulder, waiting for you to earn some money so that they can tax you in some way or another. So that's my tax rant of the day. How can you get around it? Talk to your accountant, I guess. There's not many ways around it. You can time when you sell a property so that you can time it. It's no point in selling, say, 2 properties in 1 year, because if you sell one and use up your 12,300 exemption, you can avoid tax on that, and then maybe sell one in the next tax year. So even if you sold one on the 1st of March and it completed, and then after the new tax year in April you sold another one, then that would then count in the second tax year, and you would get that exemption again. And it also affects people who invest in shares for their retirement as well. So there you go. That's my little tax rant. And somebody has to pay for it. Someone has to pay for all this money they're throwing around. I mean, last week the Chancellor announced a raft of new stimulus measures. The extension of the job support scheme, which they conservatively estimate will cost the Treasury. They all say the Treasury, but it's actually us, isn't it? It's our money. It's taxpayers' money. 6 billion on top of the billions of pounds that they've spent already locking down the country. And it also increased grants for self-employed and workers up to 40% of their average profits. And this is up to a maximum of 3,750. Now that is expected to cost 3 billion. Government borrowing is estimated to be running at, or revealed to be running at, £1 billion a day. £1 billion a day. You think of billionaires like Richard Branson. Well, all his wealth has been spent like in a day, billion, borrowed, like borrowing, like living on a credit card. And then to pay this off, they're just printing money. And how's that going to be paid for? Well, one way it's going to be paid for is in higher taxes. So the people who earn the most, and people who invest and people who save, they are going to be taxed. And savers are already been hit with low interest rates. So that's another double whammy to savers. So I don't know. I think the government's got to recover this money somehow. It's got to be paid for somehow. We can already see that the economy is weak at the moment, and yet certain shares on the stock market, like British Airways and some of the holiday companies, are shooting up for some reason. I don't know. I mean, the stock markets are relatively high, and many people are saying that the stock markets will go up again, that this is just a temporary blip. And yet other people say, well, hold on a second, the underlying economic factors are there to say that, we're in the biggest recession since the war, and thousands of businesses are going under. We see, another high street name, Cafe Nero, saying today that they want to renegotiate all their rents with the landlords, and they employ 6,000 people. They're everywhere, aren't they? They want to renegotiate all their rents. In other words, they're going to say to their landlord, which could be a private landlord, but it's more likely to be a pension fund. It could affect your pension fund if they come back and say, well, we're paying 50,000 a year, for instance, for this premises. Now we want to pay 30,000 a year, and we want you to change the terms of this legally binding lease that we signed. So we want to renegotiate. Otherwise, we close it down and walk away, or we go into administration and walk away scot-free. That is happening all over the country, not just with them, but with big names, Debenhams and these big companies. A local Debenhams in my area closed down because the landlord would not renegotiate the rent, which I think was stupid. The landlord should have said, yeah, fine. It's better to have a rented premises than have an empty premises, which is costing the landlord money, it's costing him in tax. And I say him, it could be anybody. It's appropriate. I think I did meet one of the landlords of this shopping mall. He's a young guy, actually. I just don't understand why he would not renegotiate that rent with Debenhams and have somebody in there rather than the place being empty. And it's still empty now, months and months later. But big names are renegotiating their rents. Big restaurant chains, Prezzo and Pizza Express, are saying, right, hold on a second, we're not going to pay, because of the lockdown, we're not paying all these rents. And ultimately that affects everybody, because the landlord may be relying on that rent to pay their mortgage. Not everyone owns properties outright. They probably have a mortgage for this, a commercial mortgage. I had a commercial property, and I had a commercial mortgage, which was a high interest mortgage. It was costing quite a lot. It was on a repayment over 15 years. So I couldn't afford to take a hit if the tenant said, well, we can't afford this rent, we want to reduce it. In the end, one of the tenants moved out and I sold the property, but it was always a worry, if the tenant couldn't pay the rent. Fortunately, that didn't happen, but it is a worry, and people don't have any sympathy for landlords. But as I said, your landlord could be an institution where your savings are invested. Many of the managed funds are invested in commercial property, or a portion of it is in commercial property. Pension funds have billions of pounds worth of commercial properties. Look at those shops in Oxford Street that are either closing down or in trouble. Most of that Oxford Street is owned by pension funds. I remember the Coal Board pension fund owned several shops along Oxford Street. So that will affect pensioners. That will affect how much money is left in the kitty. Not all these pension schemes are funded by the government, like the civil service pension schemes and the MP's pension scheme. It's just funded by us. We just pay out that money, regardless of the liabilities. We have to keep paying that money out on people who are retired. So where it's going, I don't know with the economy. I mean, I've got pundits who are saying the best time to buy properties now. Others are saying, well, prices could fall. Now, I've been speaking to agents recently in London, and prices are falling in London. 30, 40,000 on average has been knocked off the average asking price. And I've seen properties reduced by more than that, 50,000, 60,000, 100,000. And the market has slowed down since the summer, the property market in London. And there are reasons for that. But the market has definitely slowed down. In the summer, after the lockdown ended, we had this pent-up demand. People were rushing out and buying properties. And, you had a situation where, it's all about supply and demand, isn't it? If supply is high and demand is low, prices will fall. If demand is high and supply is low, prices are going to go up. And that's exactly what happened. supply was low, there wasn't that many properties to sell because people were holding out for better prices, but demand shot up, so prices went up. And that's what's happened. And that was everywhere. But now we're seeing a move out of London, as we are in many big cities in America as well. And people are thinking, well, maybe I won't need to commute into London every day of the week, maybe only 1 or 2 days a week. So why don't I move out to Surrey or St Albans, or further out even, or just to the suburbs, where I can get more money, more property for my money, more bang for my buck. I can get more property for the same money. Maybe I can sell my flat in London and buy a 3 or 4 bedroom house out in the suburbs, and not have to worry about travelling in. I've got more choice of schools. I've got more space for my children or growing family if they have a family, or I just want to be somewhere that's safer, and I don't have to go down in that lift every day from my high-rise apartment, sharing the lift with several people, and so on. So that could be a temporary situation. Maybe people will eventually go back to work in London. I think offices are eventually going to realise that they still need that dynamic of people working together and bouncing ideas off of each other, rather than sitting at home getting depressed. And I mean, it's fun for a while working from home, but I'm sure not everybody likes working from home and doing all these meetings on bloody Zoom. I'm sure they'd rather get round the table and talk properly. So maybe that could be a temporary thing. But at the moment, estate agents are saying in London prices are falling, and yet in the suburbs they are rising, and the market is buoyant in the suburbs. Rental market is buoyant. Properties are selling fast, and they're getting the prices that they want to. They're achieving the prices they're asking for. But definitely it's changing in London. So I don't know what will happen next year. Same with the stock market. Many stock market pundits are saying now is the greatest opportunity in history to buy shares. Others are saying, well, hang on a second, they were already overpriced after an 11-year bull run. Yes, it went down with the pandemic and then it went up again, but it's only up to where it was last year, which was already, many people think, at an all-time high and overpriced. So who knows what's going to happen. At the end of the day, you have to do your own research, if you're buying shares, do your own company research, learn how to invest in shares. If you're buying a property, use tools like Rightmove, use the land registry, use Zoopla and companies like that to really research your particular market, because there's not just one property market, even in a country the size of the UK. I mean, the US, it's even bigger, it's like a continent. So you have to do your own research really, and go on your own gut feeling. If you're buying for yourself or your own home, that's a different story, because if you're buying for your own home, it doesn't really matter if you're paying 10 or 20,000 or 50,000 pounds more now for that property, because you're going to stay in that property for many, many years. So 30, 40,000 not going to make a lot of difference. If it falls in price, so what? You're still in the property, and you're probably paying less on a mortgage than you would on rent. You're most definitely likely to be paying a lot, especially in the southeast, a lot less in mortgage payments than you would on rent, especially with interest rates at an all-time low. So there you go. That's what's happening this week. As I said, there is a move maybe to increase capital gains tax and hit investors. The UK market, the UK economy grew in the third quarter. I think it went up by about 15%, which is great news. But I think that figure will change when you take into account the lockdown that we're going through at the moment. The UK, in case you're not here, in England, we've got a 4-week lockdown. It's killing small businesses. It's really destroying little businesses, and even the businesses that are trying to open, they're closing off parking spaces in high streets. They're closing off thousands of parking spaces. They're barring traffic from streets under emergency powers. And why? They say because we want to protect people. Well, you're killing these businesses, councils and governments. You're killing these small businesses, and it's the lower paid that are suffering the most. It's people on some of these people are on the gig economy. They're not even properly employed. They fall through the net when you're talking about all this state aid. And I think up to 2 million small self-employed people have not received a penny in state aid because they don't qualify for some reason. Maybe they haven't been in business long enough. Maybe their last year's profits are not high enough. For some reason, or they've got the wrong kind of company set up, and therefore they don't qualify. I know several small businesses have not had a penny since this last lockdown, let alone this lockdown. So I think we should try and end this lockdown as soon as possible, get back to normal, so businesses can survive, because many self-employed people are just almost giving up, especially young people who perhaps just become self-employed, and we should be helping and admiring those people for having the guts to do it, but they are really suffering and can't even afford to pay their rent. They're maybe going back home to mum and dad again, I don't know. But it's a real tough time for people, particularly at the lower end. Yeah, the big companies are surviving. They can furlough people. They can even sometimes make money on furloughing people. And, all the big companies, Amazon and all these companies that can deliver stuff at home, they're doing very well. So you can buy stuff on Amazon and online that you can't go and buy in your local shop. So it penalises the local shopkeeper, doesn't it? So businesses now have to adapt and get selling online, I guess, so that they can adapt to this new economy. I think this pandemic has launched us forward about 5 years. As the head of John Lewis said, we've done more. We've almost progressed 5 years in a year by having to adapt to the market and sell more stuff online than we used to. So there you go. Thanks for listening. Have a great evening and have a great weekend. Stay safe wherever you are, and I will speak to you soon. And thanks for everyone who tuned in on Facebook Live. Great to see you. Always good to hear your comments. And even if you don't agree with me, love to hear your comments. So have a great weekend and stay safe. Thank you.